right. Well, Nvidia down again today and ending the week 8.5% lower. The semi-giant under pressure after it said Tuesday that it would take more than a $5 billion charge due to limits on exporting one of its AI chips to China. The semi-ETF SMH also ending the week lower. One of our Fast Money fans actually reached out and wanted to ask our traders what to do with the stock now.
Greetings, fabulous Fast Money team. Chuck here from Goodyear, Arizona. We had too good of a time on the live show in last February. I'm worried about Nvidia. Now with the new $5.5 billion charge tied to exports, is it time to bail or stay in jail on holding on? Peace to all. Thank you.
All right, nice to hear from you, Chuck. Guy, what do you tell Chuck?
First of all, I hope Chuck has a shirt on. I mean, he was looking scantily clad, number one. But it's Arizona,
he did that
totally.
He did that for you. He did that for you.
And you know what? And it's working.
He told you when he was here he was going to do that for you.
Fair enough. Listen, we held the August low, which was 90 recently, and we bounced. That's the good news. The bad news is there is no real bounce. So NVIDIA is trading poorly. I think it continues to trade poorly. I'd pull the ripcord here.
Yeah, I agree with that. I think you have to go back to that April level of 75. I think that's where I think it pierces the 90 level. If you look at 30% of the revenues, it comes from 3 clients, 3 customers. All they have to do is scale back, and we know they're already scaling back to some extent. The spend's not going to be what you think it's going to be. I think NVIDIA comes in dramatically from here. I would bail.
Yeah, so that $17 billion of H20s, this was chips that were kind of made for the Chinese to get around the, the export bans. They're sitting here. If they can't go, that's a huge inventory problem. Maybe that's that $5.5 billion, but that's a huge part of the expected growth, or it was 13% of their sales last year. I think it goes down 50%, and I know that sounds crazy.
50% from here.
No, I think it goes from the highs. Back from 21 to the lows in 22, it was down 70%, and no one thought it could do that. So it overshot to the upside. It's going to overshoot to the downside.
All right.
After the AI chip maker revealed that the U.S. government had essentially barred exports of its chips to China, Nvidia's shares dropped about 3% on Thursday, continuing the 7% drop it had seen the day before. In a regulatory filing late Tuesday night, Nvidia revealed that it will lose $5.5 billion in the first quarter due to the sale of its H20 chips, which are made especially for the Chinese market, being prohibited in order to adhere to stricter U.S. trade laws. According to Bloomberg data, the stock decline on Thursday reduced Nvidia's market capitalization to $2.47 trillion, indicating that the company has lost $266 billion since the announcement of the stricter trade regulations. Analyst Harlan Sur of J.P. Morgan said in a note released late Wednesday afternoon that he thinks the change will cause NVIDIA's full-year data center sales and profits per share to drop by 8% to 10%. Put another, NVIDIA would lose between $15 billion and $16 billion in sales. Blaine Curtis, an analyst at Jefferies, forecasted a less severe $10 billion decline in revenue. The Trump administration's restrictions on the chip trade caught Wall Street off guard, since NPR recently reported that Trump had retracted its plans to limit NVIDIA's H20 chips after having dinner with CEO Jensen Huang at Mar-a-Lago. According to Bloomberg, on Thursday, Huang visited Beijing at the invitation of a domestic trade organization just 2 days after the company's announcement on Tuesday. As the IT sector seeks to strengthen its domestic manufacturing base in the face of Trump's assertive trade policies, NVIDIA announced earlier this week that it will manufacture up to $500 billion worth of AI equipment in the U.S. over the next 4 years. Under Section 232 of the Trade Expansion Act of 1962, which gives the president the power to impose tariffs on imports deemed necessary for national security, the Commerce Department opened an investigation into computer chips on Tuesday, marking the beginning of Trump's preparations to impose tariffs on semiconductors this week. Trump has stated that his tariffs will continue to affect the majority of gadgets. He told on Sunday that the next national security tariff investigations will examine semiconductors and the entire electronics supply chain. Following steep drops the day before, several chip stocks had more moderate decreases on Thursday. A rival of NVIDIA, Advanced Micro Devices, saw a 1% decline as a result of the U.S.'s recent limitations on chip exports to China. Intel sank 1.6% and Broadcom fell 2.1%. The drops occur even though semiconductor maker TSMC reported profits on Thursday that exceeded forecasts, demonstrating the need for AI chips. So what implications does this have for NVIDIA stock? Let's explore that. But first, a big thank you to those of you who've stuck with us this far. Creating these videos takes significant effort and dedication, so if you're enjoying the content, please hit the like button, subscribe to our channel, and share your thoughts on NVIDIA stock in the comments. Your support truly helps us grow. Now, let's get back to the video.
So we're talking NVIDIA, Mag 7. Let's lead off with NVIDIA, down another 3% today. Ali, give me your take here on the big, pullback that we're seeing in the shares, the $5.5 billion that they're going to set aside here, according to the SEC filing here. Is this warranted at this point, and is this a concern for maybe longer-term investors?
Yeah, we think it's warranted. I don't know if you remember, but I came on and a while back, and we told Oliver that we got out of this name, and that it would actually become more attractive under 100. But additional geopolitical uncertainties are just piling up on these guys. Plus, competition is growing very, very quickly. So to answer your question, I think when you are basically restricted in terms of what chips, even though they're customized, that you can sell to China. That's one thing. The other one is the continuing competition, whether it's from the hyperscalers that these guys are facing, or Huawei, Chinese company that actually there were reports that it came out with something pretty comparable to their Blackwell 200, GB200. So they're facing a great deal of competition. It's still a very, very high quality company, but that competition and those geopolitical factors could actually decelerate their bottom line growth even further than what's estimated right now. So, we think that it's better to wait for these things to settle down a little bit, for us to get more clarity about the tariffs, about all of the geopolitical factors, and then possibly consider getting back into the name.
Yeah, we might see under $100 a share early next week. Who knows? Maybe by the close here today. Ali, when you take a look at this name, the trade restrictions at this point. I get it, right? They kind of want to limit those high-end AI chips to maybe competitors across the world at this point. But is the trade tariff and now the restrictions that they're having on the H20 chip, are those actually creating opportunities for those competitors like Huawei that you mentioned that actually might hurt NVIDIA? You've got CEO Jensen Huang that actually went to China overnight, to kind of patch things up here a little bit and see what kind of damage control he can do.
Well, that's the problem. So, when you're talking about basically certain policies in order to, rightfully so, in order to protect the competitive advantages that we have and the technology, the innovation that we keep coming up with, at the same time, you're creating additional incentives for countries and or regions such as China to actually continue to actually invest even more and to create their own chips, to create their own comparable chips. And lessen their dependency on ours, on NVIDIA. So, in my opinion, that does not necessarily help a company such as NVIDIA. In terms of its impact from a security standpoint, that really remains to be seen. We don't have any choice until wait and see type of approach on that front.
Yeah, wait and see on that one. Maybe another pullback coming. Remember, this stock was, trading a lot lower.
Although the situation has changed significantly since the initial statement on April 2nd, the Trump administration is still implementing tariffs as part of its trade policies. It has caused the stock market to become unsettled, making this week one of the most turbulent in recent memory. Investors will be keeping an eye on the situation as it develops. An analysis conducted by Yale's The Budget Lab revealed that further tariffs on China, Canada, and Mexico will result in higher pricing for electronics and other industries that rely significantly on global value chains. Because of its dominant market share in accelerator GPU chips, which are used in data centers to train and run AI models, NVIDIA is a prominent artificial intelligence AI stock. Could NVIDIA's expansion be hampered by the tariffs imposed by the Trump administration? NVIDIA might not be significantly impacted by the tariffs themselves. Jensen Huang, the CEO of NVIDIA, minimized the short-term effects of tariffs on the company in mid-March. Blackwell, NVIDIA's flagship AI processor, is already being produced and tested in the United States, with plans to increase manufacturing over the course of the next 12 to 15 months. The tariffs, however, are a sign of more general trade disputes between the U.S. and other nations. In recent weeks, tensions between the United States and China have escalated. NVIDIA said that government restrictions on supplying H20 GPU chips to China will result in a $5.5 billion charge for the first quarter. As an example of how quickly things may change, the U.S. tightened its export rules after the business had created the H20 GPU to comply with existing export constraints. Rich American IT firms have made large investments in Nvidia's chips in order to expand their computing power, develop more sophisticated AI models, and boost their ability to meet demand. Earlier this year, it was predicted that Amazon, Alphabet, Microsoft, and Meta platforms alone may spend over $300 billion on data centers and AI infrastructure. The potential effects of tariffs on these proposals are unknown. Since AI operates on the cloud, Nvidia may be impacted by cloud computing. Because of this, some of Nvidia's most prestigious clients are top cloud providers. These businesses have mentioned capacity limitations on numerous occasions. They may reduce their expenditures in AI if cloud usage declines due to economic uncertainties, particularly if those capacity limitations subside. Furthermore, Microsoft has begun to cancel or delay several data center projects. It's unclear if the tariffs and the ensuing uncertainty would seriously hinder Nvidia's growth. The slowdown in Microsoft's data centers may be unique to the business or a sign of a larger pattern. Until Nvidia provides fresh insight into its market observations during its upcoming results call, it is still too early to tell. Thankfully, the field of artificial intelligence is still quite young. In the years to come, to stay informed about the latest developments from Nvidia and the ever-changing stock market, consider subscribing to our investing tutorial channel. We provide daily updates on significant market shifts and key catalysts, so hit that subscribe button to ensure you never miss crucial information. We'd love to hear your thoughts on Nvidia stock, so please share your opinions in the comments below. Now, let's dive into today's video.
Patrick, would be remiss to not talk to you about Nvidia. Nvidia taking a $5.5 billion hit due to export controls, the stock dropping significantly off the back of that, just barely above the flat line today. CEO Jensen Huang is in Beijing, according to state media. Right. Talk to me about what this tit for tat over tariffs means for Nvidia. Just how big a headwind is it for Nvidia to be able to beat the street's sky high estimates moving forward?
Yeah, so H20, while a $5.5 billion write-off is not zero, I think the biggest risk here is if this escalates. And with NVIDIA, Intel, and AMD doing between 20 and 30% of their business inside of China, that's the biggest threat, that it escalates and gets into not just data center accelerators, but also notebook GPUs, gaming GPUs, CPUs from AMD and Intel.
And so with that in mind, at this juncture, for investors that are trying to best game out what they're seeing actually in some of the options AI market as well, I mean, this is a potential 11% move to the upside or downside by this next time NVIDIA reports earnings. What should they be kind of looking at as either a psychological marker or perhaps a technical marker that determines whether or not this is a safe level to invest?
Yeah, I think looking at the psychological marker, which is, and not too many people are talking about this, I think the Trump administration has painted itself into a little bit of corner and is trying to find a way to get out of this because they know that if you bring down Apple, you bring down NVIDIA, you're tanking the market. So I feel pretty confident over the next 90 days that this is going to be resolved. I think it'll be hard for NVIDIA to give a rock solid forecast, but I do think that they will give one based on the information they know. And then out the other side of their mouth, they're going to say, these are the risks of that forecast.
So then, Patrick, which chip's name should investors who have a long-term horizon be investing in right now?
Long-term horizon, 5 years, I believe that the best bet is Intel. And that might come as a surprise to everybody out there, but it's trading near book value. Its 18A and 14A process are on schedule. We're going to continue to have a push on U.S. company, U.S. built semiconductors. All Intel has to do is hit a couple of not home runs, just getting to second base. And you're going to see Intel move a ton. And also Lip-Bu Tan, we haven't seen any of the big decisions that he's made yet as a new CEO. And I think whatever he puts out there whether it's massive job cuts, R&D cuts, sale of assets. He just unloaded Altera. I think these will be positive news for investors with Intel.
Yeah, I was just about to acknowledge that, Patrick. It's a larger question of how much of the business as we know it right now is still intact, or if there's a kind of sum of parts that we're going to be looking at in the future.
More sophisticated AI models will be available. Much more use of AI will result from wider adoption. AI will support the development of industries and applications. These are all factors that are driving up demand for chips. The semiconductor sector is expected to grow from its $627 billion forecast last year to $1 trillion by 2030, according to leading accounting firm Deloitte. Naturally, a large portion of that development will likely be driven by AI. Nvidia should continue to grow as long as it continues to lead the AI chip market, regardless of tariffs. This drop is most likely an opportunity to purchase. It would be prudent to be cautious in light of all the political and economic uncertainty. Thankfully, the market has taken care of it for you. Nvidia now has a price-to-earnings ratio of 38, down roughly 25% from its peak. Over the next 3 to 5 years, analysts predict that Nvidia's earnings will increase by an average of 37% every year. With a price/earnings to growth PEG ratio of roughly 1.0, the stock is currently a great deal if the company grows as anticipated. The estimates seem reasonable to me. In its fiscal year 2025, Nvidia's adjusted profitability increased by 71%. But as the firm expands and spending on AI chips slows, that growth will slow. Let's say that Nvidia's earnings growth is slower than anticipated. If earnings growth over the next 5 years is as low as 19% a year, the stock is still a good investment. Today, the PEG ratio would be 2.0. In general, I'm happy to purchase high-quality equities at PEG ratios of 2.0 to 2.5, and Nvidia definitely meets that need. The stock would most likely still do well in the long run, but the investment returns would be lower. For long-term investors, the company presents a very attractive risk-reward proposition, as long as AI continues on its long-term trajectory, and Nvidia plays a key part in how that unfolds. In this instance, the tariffs are probably more noise than substance. Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.
I think from a CapEx standpoint, it's going to be early for people to actually come out and cut their CapEx, such as TSMC. It's such an important number for them. They're in the business of providing capacity. And so the 38 to kind of 40 plus 42 billion range is something they typically wouldn't cut early in the year also. They want to instill confidence in their existing customers. At the same time, it can be a negotiation technique as well. Well, we're keeping our CapEx high, please kind of pre-order. Let's get some, pre-bookings in. I think that NVIDIA announcement, probably the 5.5 billion, I think some of that was pre-committed, probably wafers that, the TSMC wanted to commit to. This is expensive capacity, right? And TSMC's taking a lot of risk. So I don't think they'll budge much on that yet. They'll probably have a lot of tone about uncertainty and tariffs like ASML did as well. But from a standpoint of the stock, I think there is two levels here. There's the tariffs, but also there's a typical kind of semi-cycle dynamics here that we've seen so many times. Everyone has unlimited confidence in the killer application, smartphones, PCs, and that now is AI. And what tends to happen is you get over ordering, you get people kind of a little bit too bullish on end demand, worried about supply from TSM because of the very long cycle times. I mean, it takes 3 months to get your chips, and if you're Google, Amazon, you want to make sure that you get your fair share, especially relative to your competitors. So I think on the margin, people have been ordering probably more than they really need, and we may see a little bit of adjustment there as the year goes on. We've already seen some push-outs in some of the CoWoS, the packaging numbers on the margin. So investors will be looking at this. Number one, if CapEx is high, demand uncertainty, what's my risk reward? The risk is, perhaps there's some excess capacity and you have some margin pressure in the stock in the second half of the year if they don't deliver on the growth numbers. So I think the stock is probably not going to do too much in the next next few months until we get, obviously then there's the tariff stuff, right? And that will move everything. That's not company specific, but obviously any clarity on tariffs would help, semis quite a lot.
As we continue to focus on TSMC, And we watched this volatility in the market as we saw, of course, the moves in NVIDIA and AMD. What does TSMC need to deliver tonight for the market to stay calm in terms of its bottom line, in terms of its guidance?
Yeah, so TSM is one of these companies, at EFM, our kind of strategy in AI, and our performance last year was 46%. TSM was one of these companies, and I think when you look at a TSM and you look at the guidance, you really need to see a bottoming to the numbers. And so you take money off the table when TSM's we haven't seen expectations cut to the degree that we need, and we need to see some earnings cuts across all of semis and TSM, I think. But I don't think it's going to happen this quarter. I think we're going to have to go all the way to the July quarter to start to see some adjustments. Like that 25% growth number, or mid-20s, is the guidance looks to the high side at this point. I think people are going to see that go to the lower, and CapEx even better. Like a catalyst for the stock would be to see the CapEx come down to the lower end of the range. And then as the year goes on, kind of the 26 number for the chip scale, the CSPs, the hyperscalers. That's a number that is in high debate with the street right now. Is it consensus shows 7% growth next year? If that's a number, that means most of these companies are still pretty richly valued. If that number is 15% in terms of spending and CapEx at hyperscalers, then NVIDIA and everything else is undervalued at this point. So a lot weighs on that. I mean, that's the key number. And what ties into that key number ties into tariffs, ties into end demand, ties into macro and monetization. So there's a lot on our plate as we look at our portfolio.
When you look at a company like TSMC, is the geopolitics stronger headwind or the AI a stronger tailwind? And I ask this in the context of the R&D that they are now building out in the United States as well. There was a silicon shield in Taiwan, and now they are shifting that to the United States. What is your take?
Well, yeah, great. Yeah, a couple key questions there. Structurally, no change on AI is being transformative for the global economy, for productivity. Obviously, transition challenges for certain industries and disruption, but tech has always showed that companies adapt and work through that. So very positive on the directional change there. On TSM's, they've done a great job in managing U.S. politics. I felt to the standpoint of investing huge amount of capacity in the U.S. The initial number was quite low, but in reality, they need to go big, and they know they need to go big, right? Because you get economies of scale there. So I think they're going to be perfectly willing to talk up the U.S., and they are executing well in the U.S. The idea that U.S. is much more expensive isn't quite right? Most of the cost is R&D. Once you have that fab scaled and you have the infrastructure in place, the labor cost is a very small part of that. If you get regulations and labor unions, all that fixed, which they have already, then I think they're going to be quite happy with the productivity out of those fabs, and they're going to be perfectly willing to kind of keep upping the numbers on U.S. and do their job. So I think relations to TSM with U.S. government is going to be fine. Of course, Trump likes to claim that it was because of him. But in reality, let's face it, it is a geopolitical a risk with regard to being so concentrated in Taiwan. So I consider the U.S. as a win-win for everyone. It's for TSM, for Taiwan. And it's too small part of overall production to suggest that they can actually sell Taiwan or give away Taiwan, because that's ludicrous, those ideas. Taiwan will remain a strategic part of our global tech infrastructure for time to come, and everyone would defend Taiwan in the world to keep it